Welcome, designers. My name is Marissa McKinney from Logistis, and I am here today to talk about better bookkeeping for interior design. Just to give you a little background about where I'm coming from, I started working with my first interior design company in 2013, and they stressed to me the struggles that interior designers encounter to find an accounting professional that knew their particular industry. As a result, I quickly learned the business, and since then, people come to me from all over the United States asking for advice. The one thing that I want to stress to designers, and what I see is the most important thing from an accounting standpoint, is that it's all about their workflow process. And I am here today to share that process with you. So, let's get started. Today, we will talk about the following: getting started with QuickBooks and Ivy, the general steps that all designers should be following to ensure the best workflow process, how to make the most of your Ivy and QuickBooks Online integration, sales tax tracking in Ivy and in QuickBooks, and keeping it simple while keeping in touch with your bookkeeper. Getting started. It is so important to work with a bookkeeper who knows your specific industry. A lot of people come to me and tell me that they have gone through 5 bookkeepers in the last year, people who were recommended accounting professionals but didn't necessarily know interior design. And if you don't know this specific industry, you're really not qualified to do their accounting. Choose a bookkeeper who has experience with the softwares that you're using. Choose a bookkeeper that has the specific industry knowledge and can help you get set up and help you with your day-to-day. And doing all of this will minimize your future headache and also minimize your vulnerability to potential audits. Once you land that big job, once you start hiring staff, you really want to make sure that all of your systems are ready and set up to go. Just really set up a test account and play with it. Make sure all of your mapping is good. Make sure everything's translating from Ivy over to QuickBooks seamlessly. Figure out any quirks so that when you do start really rolling, you don't feel overwhelmed. You already know this. You already know the process. You have this down, and you can just move on with a clean, clear, concise view as to how to move forward with your interior design business as a whole. One of the major things that I want to talk about today in the processes is that you really need to make sure that you're getting paid before you order, or at least getting signed approval. We'll go into more details about all of this stuff in just a minute, but I just want to make sure that that point is stressed when we're talking about account setup. So let's continue. So what's the point of the process? The point of the process is to ensure that all invoices are final, they're closed, sealed, those items are approved or have been paid for, and they're posting and tracking to the financial statements accurately and timely. The purpose of creating purchase orders and posting payments on purchase orders is to help assess an accurate liability of your company at any given point in time. Also, closing those purchase orders by posting the payments helps to manage what has been paid and what needs to be paid, and pulling accurate project tracking reports, etc. So you may have $100,000 in the bank. Of that money, how much is actually yours to spend? How much is the client's to spend? Perhaps you received a $100,000 check from the client, and of that amount, you are required to pay out $80,000. So really, even though your bank balance is $100,000, your actual cash balance is really only $20,000. And you really want to be able to know what those amounts are at any given point in time for obvious reasons. And you may have one job and it may not feel like you need to be tracking this, but you get 2 jobs at once and it gets complicated fast. So just make sure that you're following the steps. You'll always have financial and accurate data to assess your company's financial standing at any given point in time. If we're using this screen grab as an example, this is a report you could pull in QuickBooks. You could also have this automatically sent to you on a certain day of the week or a certain day of the month or whatever schedule you want to set up. And then you can have these reports auto-generated and sent to you to always have accurate and timely information of your liabilities. So for example, this company's open purchase order detail report says that it has $959 in open liability. So that means that these are the amounts that have not been paid to vendors. So going back to the example of $100,000, if you only have $100,000 in the bank and you have $959 in liability from your open purchase order detail report, then it looks like you're in pretty good standing because you really only owe about $1,000, which means you have $99,000 left in the bank. So these reports are really great. That's another great thing about the integration between Ivy and QuickBooks is that you can get tons and tons of reports in QuickBooks. You can get them customized. You can get really good information readily available at your fingertips whenever you want it, as long as you follow the steps and you do your part to ensure that the information coming over to QuickBooks is accurate. So that kind of sums up the point of the process. We'll go into the details of the actual process in just a minute. Let's just talk about the mapping and the test account. So this is my general overview of how I like things mapped. I set these accounts up both on the Ivy side and the QuickBooks side. You really kind of need to know your chart of accounts in QuickBooks in order to get this information set up accurately. So you really want to probably solicit some help at this current point in time for getting set up accurately. Ivy has their defaults, which are great, and they work just fine, and you could set them up. But you really want to especially get your payable bank account, your payable credit card account, perhaps your undeposited funds set up. Those are the main ones. The other ones have to do with tax categories. So in California, labor, repairs, and install is non-taxable. So you want to set up those particular accounts so that you can file your sales tax accurately. Again, they have tons of webinars on how to get set up in QuickBooks. So if you are going to try and attempt to do this yourself, really make sure you utilize those webinars and access that information before you get started. The last part in the getting started process is, like I said before, I just want to really stress that it's so important to receive payment on proposal and get paid, or at the very least, get written authorization from your client, or digital authorization if you're using Ivy. Obviously, you can get that approved, which is what these screen grabs are showing you. So you can submit it two ways. You can submit the proposal for approval only, or you could submit the proposal to allow payments on that proposal be sent through Ivy. Either way, for liability on your part, if you're just getting started as an interior designer, I really can't stress how important it is to just get this written or digital approval, or preferably payment on proposal before you do the ordering. I know some people that do it backwards and some people that have had really awful, terrible experiences by doing this. And it's all okay until you have that experience. Like you are designing for your friends, or you are designing for people you think have a lot of money. A person could have $1 billion and then all of a sudden get a divorce, and now you are left with a freeze on their funds and potentially lots and lots and lots of money out of your own pocket having been paid because you didn't receive that payment on proposal. So I encourage you all to just really make sure that you're receiving payment on proposal. And at the very least, if you're not doing that, get consent, get approval through Ivy, get written consent, do something to ensure that you are protected if it ever has to go down that path. Okay, here we go. The meat and potatoes. To ensure the best working relationship between you and your bookkeeper, follow these steps every time on time. Designers create items and proposals. The client pays and the payment is applied to the proposal. Immediately after the payment is applied to the proposal, an invoice is created. And immediately after an invoice is created, the purchase orders are created. Once you get to the ordering process, you apply the vendor payment to the purchase order at the exact moment that you do the ordering. And if everything, again, is done in sequence and correctly, all financial reports should be accurate and in real time. So let's run through what this looks like in the process. And as we mentioned during the getting started slide, I suggest setting up a test account. So you can practice these steps in your test account. And of course, you're going to practice them for every actual real client that you have. But I'll show you in a test account so you guys can set one up in your own Ivy account and you can play with it that way. So, test account. I set up a project called Test, and within this project, I created a proposal. So, once we've sent out this proposal, and I'll create another one just so you guys can see it. I'm just going to put something in there. It could be whatever. The cost is going to be $200. My markup is going to be $10. Let's throw some shipping in there, $10. And then I'm going to save the proposal or save and send if I'm actually going to send it to a client. So I am going to allow the client to put a deposit on this proposal. So I'm going to click this, which means that the client can pay this proposal once they receive it via email. And I, however, do not want to pay the credit card transaction fee, so I will charge the client transaction fee to the client. And then I'm going to send it off. So, if my client sends me a check and they don't pay me through Ivy, then I'm going to record a payment. The check number that the client gave me was number 1100, and the amount was for the exact amount of the proposal that I sent. So now that I've received the client payment, I'm applying the client payment to the proposal. Once the client payment is applied to the proposal, immediately after, I go to generating an invoice. So we want to recognize this money received from the client as income. And if you just post the payment on the proposal, it's not going to recognize the money received by the client as income on your financial statements unless you post it to an invoice. So we're going to start the invoice, which is really simple because all this information is just tracking over, including the payment that has been applied to the proposal. I'm going to simply save this. And you'll see that the balance is 0 because we had already applied the payment to the proposal. So now if you look at their invoices, you'll see that their balance is 0 right here. And then if you go ahead and create the invoice, you need to create the purchase order immediately after. So we're going to go ahead and create the purchase orders. This item did not have a vendor attached to it because it was just a random accessory item that I pulled from my default account. But let's just say it's Rebecca Atwood. And now we have a purchase order for that. So now I am able to ascertain my liability, the amount that I owe on the payment received from the client. So the payment I received from the client was for $250.90. Of that amount, $200 was the purchase cost for the item, which is what I need to still pay out at the vendor. And then the sales tax liability was $20.90. So if I go over to my financial statements, I can see that, let's just do the date that I created. You'll see this item, plus I think another one, making my total income for the money received $241. Let's see, I think this is it. Okay, $220 and $10. $220 and $10. So my financial reports are now accurate. The money I received is now being tracked over to QuickBooks so I can pull financial reports to ascertain my actual income received. Now, if I want to check my liabilities associated with the amount of money that I have in my bank, I can simply pull a open purchase order report and view those liabilities. So for this Rebecca Atwood item that I entered, I owe $200 to the vendor. Once I post the payment, to this vendor. So right now I'm going ahead and I'm about to order something, and then I go to look at the vendor invoice. I make sure that the vendor invoice is exactly what I'm paying, and I paid this with my credit card. I'm just going to put my initials in and the date. And this is the exact amount that the vendor charged me. And I know that this is the exact amount that the vendor charged me because I'm looking at the vendor receipt right now. So then I go to create the payment. And now my purchase order report will be less. So now my liability is reduced because that item was removed. So now I know what my income was, I know what my liabilities were, and I also have an accurate sales tax report that I can pull too. And I'd like to run through each of the steps again and also discuss some common situations that occur and how to handle those while going through the steps. So we'll start again with, of course, creating proposals. Let's go ahead back to our test account. We're going to create a new proposal. And we're going to be selling, what are we going to sell today? Mid-century art, West Elm item. There we go. My markup is going to be 30%. My shipping is going to be $25, and the item is taxable. I'm going to save this proposal. I could save and send it to my client if I'm ready to do that. Let's just say I sent it to the client and the client has sent me back a check. So what I'm going to do is receive payment on this proposal because the client has now approved this. They've sent me a check, and I'm going to record this client payment. And then, of course, once I record the client payment, immediately after, I'm going to generate the invoice. So I have this invoice. The balance is 0 because we've already applied the client payment to the proposal. And of course, immediately after I generate this invoice, I'm going to generate the purchase orders to offset any liability associated with the money I received from the client. So when I'm creating the purchase order, I want to bring the shipping that I entered from the item into the purchase order. So I'm going to include the shipping. And now I have this purchase order right here that I've created for the mid-century art table. And I have $25 in shipping. So now the money that I've received from the client is included on my financial statements as income. And I can also pull a report, a purchase order report in QuickBooks to show let's see what purchase order number is this. This is purchase order 11. So now here it is. It's right here. There's the table, and here is the shipping for the table. So because I haven't posted the payment to the purchase order, I haven't posted the vendor payment to the purchase order, it's going to show up on the open purchase order report. So that's my liability right there. So now I want to go ahead and order the actual table to reduce my liability, get that off of the open purchase order report. And so I'm going to go ahead and say I'm going to order this online. I'm going to go to the West Elm site and I'm going to make the purchase online. And when I go to receive, or when I receive the email confirmation from West Elm, I'm going to look at that receipt and I'm going to record my payment. Let's just say I paid with a credit card. Now I'm looking at the West Elm receipt and I'm looking at the purchase order in Ivy, and I'm noticing that West Elm didn't charge me $25 for shipping. They charged me $30 for shipping. So I can't post this amount because that's incorrect. And I can't post a different amount because that just won't work. So my only solution to this is to change the actual cost of the purchase order. So now I have to figure out whether the vendor charged me too much for shipping, or whether I'm going to go back and bill the client more for shipping, or whether I'm going to eat that cost. My choice in this particular situation is that I don't think the vendor messed up on the shipping cost, and I don't want to eat the cost, so I'm going to go back and I'm going to bill the client for the additional cost, which means I have to change the purchase order to match exactly what the vendor receipt was. So the vendor charged me $399 for the item and $30 for shipping. They have my resale license on file, so I never had to pay tax to the vendor for this item. So now I'm just going to save this purchase order. And now I can accurately post the payment to the proposal, or I can post the vendor payment to the purchase order, to get really descriptive with my verbiage. And posting the payment, create bill and post payment. So a lot of people ask me what they're supposed to click here. It's create bill and post payment. This option will probably change in the near future, but for now you want to create the bill and the payment. Actually, I'm going to record this payment because I don't want to make a payment through Ivy right now. So I'm just going to say I paid it with my credit card. The exact amount that's going to hit my credit card statement is $429. I'm going to put my initials in here and I'm going to put the date, create the bill and the payment, and I'm going to post the payment. Done. Okay, so now I'm going to go back to my purchase order report. See, it was purchase order 10011, and it should now be removed from my liability because it's essentially saying that I've already paid for this item. I've posted the payment to the purchase order, and that particular purchase order is now off of my liability report. So now I've decided I wanted to go back and bill the client that extra $5 for shipping. But I don't really want to send them an invoice for $5 because that just seems ridiculous when you're dealing with a $100,000 job or something. So since the job is kind of ongoing, I'm going to go ahead and I'm going to create an additional proposal for like a running reimbursable expense tracking proposal. The reason that I'm not going back and editing the invoice is because I never, ever, 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 ever want to edit an invoice. I avoid editing an invoice at all costs. Once you apply that payment to the invoice, it should be final. There should be no changes made to that invoice unless you absolutely have to. So once you've created that invoice and, well, first of all, if you make one change, it may mess up your sync to QuickBooks. That's one reason. But the other reason is because you shouldn't edit invoices once you've received payment or once you've received approval on that particular item. So if you send a client a proposal, they approve the items on the proposal, they send payment, and then you're creating the invoice from that. If you alter the invoice, you're altering what they've approved or what they've sent payment on. So you don't want to do that. It's not good practice across many means. Avoid it at all costs. If you don't have to change the invoice, don't change the invoice. There are other ways. So if I want to add additional shipping costs to a particular item, what I would do is I would start a new proposal. I think I've already started one here. Running reimbursables right here. I have not converted this to an invoice because I haven't yet to send it to the client. So I'm going to add that additional shipping cost. And you can edit a proposal as much as you want. A proposal is your working document. You can put stuff on and take stuff off, but when you finally get to the invoice, that's when you don't make the changes. So feel free to go crazy with the proposals and making changes and doing whatever you need to do for the proposals. But once you turn it into an invoice, that's where you need to make sure that it's totally final. The only particular situation where you should be editing an invoice is if you have to return something to the client, or if you ordered something and then the vendor for some reason said it was no longer available. Those are particular situations where you may need to edit the invoice. But again, even if you can avoid not editing the invoice and just adding that as a credit item somewhere, that's an even better way to do it. There's a few ways to do it, but I just want to leave that as being stated. Do not change an invoice if you don't have to. Change a proposal as much as you want. Don't change an invoice if you can't avoid it. So, adding the shipping cost, what I would do is I would add an item. So it looks like we already had to bill like some additional shipping for the rug. Now I have to bill additional shipping for the item we just created, the art table. So I'm going to add that over here. It drags over. Come on, there we go. And then I'm going to do the same thing I did here, which is just additional shipping. Let's just say the additional shipping was $5. Okay, it's not taxable, and I'm going to save that. So I have this running reimbursable proposal that I can send to the client at any current point in time to try and get those funds. So say our additional shipping cost wasn't $5 or $10, it was $400, and I want to recover those funds right away. I can send this proposal at any point in time, whatever you feel like you want to send this, or the job is coming to a close and you want to send it then. That's fine. This is just one way that you can do it when you have a particular item that you found out that the vendor charged you more for. So this is a way to kind of recover costs back from your client for those particular items without having to alter an invoice. So now, everything's done in sequence. It's done correctly. All the financial reports should be accurate and in real time. We're going to run through the steps yet again, and this time we are going to discuss what to do when a client pays multiple proposals, or you have to record multiple payments to a vendor during these steps. So we'll cover those two topics in this round of going through the steps. So first step, again, creating the proposal. Let's go ahead and do that. I'm going to create 2 proposals this time because I want you to see how a payment is applied to multiple proposals via one check from the client. So markup 500%. I guess we all would probably wish that. Shipping is 10. Save. Okay, so let's just say we have 2 open proposals from this client, and we want to apply one client payment to multiple proposals. So unfortunately, if a client sends you a check for 2 different proposals on one check, you can't record the full payment, so it's not going to pull through over to QuickBooks in the matching section. So what you have to do in order to have a little bit of a workaround is you could put split into the reference box. So let's just see client paid with check number 1005. But we had to split these payments up, so we're going to let our bookkeeper know that we had to split them up by writing split into the reference number. So create the payment on this. And then we're going to create the payment on the other proposal. So we're going to write split again. And so this way, when your bookkeeper goes in to look for that payment, they're looking for a particular amount, but the amount of $219.37 isn't going to show up. It's going to show up as a split. But your bookkeeper will be able to see this information and be able to figure it out because it's the same payment date, it's the same check. So this will help you correspond to your bookkeeper and relay this information when they're trying to make the deposit. So now that we've created the proposals, we are going to, of course, create the invoices immediately after. So let's see, start invoice, and then we create the purchase orders. So creating the invoice and then creating the purchase orders. And it doesn't matter if you don't get to the purchasing part, for another month or so, that's fine. Your liability is the same. So you want to go ahead and you want to create those purchase orders. Oh wait, I just did this one. You want to go ahead and create those purchase orders as soon as you create the invoice, whether or not you're ready to order. Okay, no shipping was associated with those 2. So now we have purchase orders for all of the invoices that we have created. So we've discussed how to apply a client payment for multiple proposals by entering split into the reference number. Let's go ahead and talk about how to do that with purchase orders. So say you ordered something from Rejuvenation. Well, let's make something more. Let's say you ordered something from Zuo and you were only going to do a partial payment, a deposit. So you could make a payment, you could record a payment. Say you're paying with your credit card, you could write even 50% deposit. And then you could do like 55 if that was your initial deposit. And then you would now still owe that. So you'd still see that on your open purchase order report that your balance is $54. And then you've made a partial payment for the rest. We're going to take a break from the steps, although we will come back to them. But for now, I want to discuss how to make the most of your Ivy and QuickBooks Online integration. As we discussed, interior design is one of the most complex accounting systems across any industry. It's crazy to think that a huge warehouse and a corporation might have a less complex accounting system than an individual interior designer. And that's just because you guys deal with so many different vendors, so many different sales tax situations. I mean, in California, there's a whole individual publication devoted just for interior designers. And I'm sure every other state has their own set of complications as well when dealing with interior design. You guys deal with different types of billing. You have hourly and you have fixed rates and you have retainers. And I mean, there's just so much to it. So as we mentioned before, it's really important to choose a tax professional that knows interior design, but you also have to understand that with the integration of Ivy and QuickBooks, there is going to be some things that we have to use workarounds in order to make the integration work seamlessly. We showed you a few. So one of the ones would be that when a client pays with one check and Ivy doesn't let you record one payment for two proposals, there's a workaround. It's a simple workaround. You just put split in the reference number, and if your bookkeeper knows what they're doing, it's a simple way to talk to them without ever having to go into QuickBooks. So there are things like that, certain situations, certain workarounds. I'd like to discuss some of the most common ones, such as refunds and tax paid purchases. Before in our tutorials for the steps, we discussed not altering an invoice. Again, just don't ever do it. But when you're asking a software like Ivy to fit into the square box that is QuickBooks. So since QuickBooks does have limitations in its functionality, such as not being able to create negative purchase orders or multiple payments on a purchase order without closing it out and copying it to a bill, you would need to make Ivy work in a way that, again, you can talk to your bookkeeper while still having accurate information when you're looking at your overall numbers. So let's discuss refunds and how they're handled, because if you're trying to put in a refund into Ivy, if you're trying to put in a refund into Ivy, multiple amounts will not go over into QuickBooks. So you can't purchase something at its full cost and then add a refund and then expect QuickBooks to pick up those two different amounts, which means it's not going to match your bank statement, which means your bookkeeper might have questions. So the way that I've found to be the best way to do a workaround on this would be to actually create a product. Create a service that is a refund and a return. and then just add that individual line item to your purchase order, and you kind of do it that way. So let's just say we ordered this charm wool rug, and it had a stain on it, and you didn't think that anybody would ever notice the difference, and you ended up getting it fixed on the side, or you had some magic carpet cleaner that got it out, but the vendor actually decided to give you a refund. So we're not passing this refund on to the client because the client's getting the rug in perfect condition, but we still are getting a refund on this order from the vendor. And so the vendor's not going to charge us the full amount. The vendor is going to issue us a refund, but we've already paid for the item. So let's see. Let's go. Purchase order. So we have this item that this purchase order that we've created from the item, and we haven't posted a payment on it. But let's just say we purchased the item. And then the vendor wanted to give us a refund for this item. What do? You can't just put in that credit because the amount that you paid will have been more than the actual amount of the purchase order. So what you have to do is you have to create maybe a refund item. So I put this into services, and I did it as a service because I can map it over to its own account in QuickBooks by doing it this way. So I'm just going to say that because there was a stain on the rug, the vendor decided to issue us a $100 credit on the order. So now if I change this amount, and I've already posted payment, it won't let me save because the PO has already been paid, and therefore you can't reduce the balance. Okay, so what do? Well, I need to go ahead and I need to edit the original cost of the item. So I would delete this payment, and then I would edit the purchase order, and then I'd add in the refund. I'm not going to get tax on that because it was just a straight refund, and plus I didn't pay it on the first place. And then you would save the purchase order, and then you would repost the payment. But you see the problem now is that the vendor has already charged your card. West Elm has already charged your card for the original cost of $1,948. So by deleting that payment and reposting it to this amount, $1,848, it's not going to translate over to QuickBooks with the exact amounts matching. So our workaround for that is to just simply make the payment for the amount with the difference. You could put refund in the reference number. You could put your initials and the date, and then create the payment. So these are just kind of like leaving your bookkeeper a little memo. The other thing that I would do to help track this stuff is to add it to a Google spreadsheet and just put in this information. So the date of the original purchase was on 5/2/18. The date of the refund was on 5/3/18. The purchase order was this. The vendor was. The total exact receipt amount. So the original amount was $19.48, and the amount of the refund was $100. And then this will just leave a note for your bookkeeper. You could also add in something into the memo box about this. So you could say something like that. You can leave yourself as many notes as possible. It's always good to have a nice note to reference back about certain things. So when you see this coming over, this payment, you will see and so you'll see this payment pulling through as the $18.48, the final amount. You won't see that there was a payment posted for a particular amount and then a credit was applied. So when a bookkeeper is looking at your bank statement and they see $1,948 coming through on the bank statement, and then the $18.48 is not going to match up. Sometimes it's pretty obvious as to what happened because they'll see that $100 credit and they'll be able to figure it out. But sometimes if there's a lot of stuff like this going on, it may be a little more difficult to spot. And also if the refund occurred in a different month, it's going to be really difficult to spot. So do you and your bookkeeper a favor, put in a memo like this, and then just to try and minimize the amount of correspondence or confusion, you can also do like a Google spreadsheet of something like this. Another good reason to do this Google spreadsheet is because you also want to be reminded of a refund. So say the vendor said they were going to give you a refund of $100, and you got an email confirmation from West Elm saying, yeah, we'll send you $100, gift certificate or whatever the case may be, or a credit, or whatever it may be. And then what if they just forget to give you the refund? This Google Doc will also help kind of remind you that that's the case. So if we never see that $100 credit coming through on the account, then we'll be alerted to the fact that, you're still missing some money. Somebody still owes you some money. So that's one particular situation. Another one is the tax paid purchases. So let's just start talking about sales tax and then we can talk about how to account for that. It's very similar to how I would do the refunds, but Ivy actually allows for that setup. So let's just dive into it and you'll see. Okay, moving on to sales tax tracking in Ivy and QuickBooks. Unfortunately, I can't discuss this as a whole without getting into what accrual-based accounting really is. So there's two different types of accounting. There's a cash-based accounting and accrual-based accounting. Basically, most people report on the cash-based accounting. But a lot of the reports that you'd want generated most accurately are pulled off of the accrual-based accounting and interior design. So a lot of systems are set up to pull accrual reports, meaning if you generate an invoice, it's counting that invoice as income under the accrual-based accounting, and it's pulling through on your Ivy sales tax report, and it's pulling through on your QuickBooks sales tax report, and there's potential for your P&L to have unapplied income, etc., etc. Basically, in accrual accounting, anytime you create an invoice, that invoice is being counted as if the money had been received, whether or not you've actually received the money from the clients. And since most people file on the cash basis, it's really important to make sure that those reports are almost always the same. Your cash and your accrual reports should pretty much always be the same. And the way that you make that work is by always following the steps. If you always follow the steps, your cash-based reports and your accrual-based reports in accounting are going to be almost exactly the same, which is good when you're dealing with sales tax and you're dealing with income tax and things like that. You want those reports to have as little difference as possible. So if that's too complicated of an idea, just remember, follow the steps and you don't have to worry about the difference between cash-based accounting and accrual-based accounting. Those steps were developed in order to make those numbers match and to avoid you from having to think too much about this. The next thing I want to talk about is just knowing your state sales tax laws. What's taxable, what's not taxable is services. Some states have taxable services and some states have taxable shipping. Some states don't have any tax. Just know your laws. And if you're ever in doubt, you can always give them a call. I'm sure they'd be more than willing to give you advice or direct you on how best to calculate that. But definitely know your laws, because at the end of the day, if you don't collect sales tax on something that's due and you try and go back and bill a client for some sales tax that wasn't billed on an invoice a year ago, it's highly likely that they're going to pay that, but it is highly likely that you will be liable to pay that. So, know your state laws, contact someone that does if you're unsure, and just make sure when you're generating your items, you know those particular nuances that are embedded in your state laws. So now let's go into tax paid purchases and how to account for those in Ivy. First of all, as we've discussed, tax paid purchases. You should never pay tax to the vendor, ever, ever. In the event that you don't have a choice and you are forced to pay tax to a vendor, there are a couple ways that you can record this tax paid purchase in Ivy. So we'll go into how to go about doing that. All right. So Ivy has a way of tracking sales tax paid to vendor, but it only works if you're buying and selling items in the same tax location. Ivy is able to track taxable sales wonderfully, but if you need to calculate the total sales with exact deductions, you should probably keep a separate spreadsheet of these tax paid purchases like we have here. So we have a lot of our designers on top of the refunds that they record, also to always be sure to record any tax paid purchases so that nothing gets missed and that we're always triple checking that there's no double sales tax paid, right? You don't want to pay sales tax to a vendor and then have to pay it back to the state because it wasn't added as a deduction on your reports because something was missed. So, in order to just be extra safe and careful, we've developed this spreadsheet that I suggest you use in order to track any tax paid purchases. So let's talk about sales tax tracking in Ivy and its capabilities now and what they're working on in the future. So as we just discussed, Ivy does have the capability to mark an item that you're purchasing as taxable as long as it's within the same tax location that you're buying and selling. So if we open up, let's just open up this order right here. And let's just say we purchased this West Elm accessory in the store and we ended up paying tax on it. What we could do is we could mark this item as taxable. So we're in the purchase order right now. This is the purchase side of things. And you're going to mark the item as taxable, which means that you are paying this particular tax to the vendor. Now, this is great because it's going to calculate the taxes that you paid, so you can just simply post the payment on the purchase order. You could even put, if you wanted to, and then you could post create payment. And now that's going to come across beautifully when you are trying to match transactions coming from your bank statement in QuickBooks. However, the only limitation to this is that it's not going to show up as an offset to your tax liability account in QuickBooks. So one feature that I prefer, even though they have this capability right now, is to go ahead and set up a product like you did for the refunds. Or I'm sorry, I keep saying product. I mean, you want to set this up as a service so you can map it to the other category right here. So set this up as a service, right? Tax paid. And then you want to save it. And then if you're going to, we'll just pull up another purchase order and do this again a different way. So if you want to look at this purchase order and act as if the vendor charged you tax, you're paying tax, then you could add in that particular service as an item. So when you're entering this tax paid purchase as an additional line item, let's just say the tax was 9. Then you can post the payment with the correct amount. And now this amount is the exact amount that's pulling through on your credit card statement. And you're going to record this. We're in Q2 now, aren't we? Get out, come on, go. We're adding the tax paid purchase as a separate line item instead of just checking this box right here. And we're doing this so on our profit and loss report, we'll see this broken out as another line item. So you can make the payment, and the payment is going to be exactly what you paid the vendor. You can add the purchase order. You can add the purchase order details to here. I'm not going to go ahead and add all those details right now. And then you'll see when you pull a sales tax report, so this is your sales tax liability report, you'll see that this particular West Elm invoice for the item that we just posted the payment for. So here we go. We have purchase orders. We just posted the payment with taxes paid on this. Tax paid purchase. It's linked to this invoice, 10005. You'll see that pulling through on the sales tax liability report. So that's the amount that we're charging to the client. The full sales tax. There's no offset for the amount of taxes you actually paid to the vendor. So that's why it's good to keep a separate log here about the taxes you paid to the vendor in order to get accurate deductions when you're filing your taxes. So if we go to the reports and we pull a profit and loss for all dates, we'll see that in other purchases, there's this tax paid purchase right here. And so by adding that separate line item as we just did in the purchase orders, we're able to see this amount broken out on the profit and loss statement, which you wouldn't necessarily see if you were to just check the taxable box. So if you were to just check this taxable box, you wouldn't necessarily see it on the QuickBooks side of the profit and loss. So that's why I like adding the additional line item as a tax paid purchase instead of just using this. But, lots of people like this because if it's a smaller amount and they're not charging tax to their client, then they can just do this and call it a day. Me being more detailed oriented and somewhat OCD about these things, I prefer this way of just tracking it as a different line item so that I can see it clearly broken out under the other cost of goods sold account on your profit and loss statement. It's kind of confusing, but if you guys all want to just take a screen grab of this right here, this is kind of how you would set up your tax paid purchase items in QuickBooks and in Ivy, and then as long as it's set up correctly from the start with your mapping over to QuickBooks, it'll come up in your QuickBooks profit and loss report as a nice, clean, separate account. So the other exciting thing that Ivy's working on is, like I said, right now you can only check this little box for the item to mark as vendor paid tax. But in the near future, you'll be able to choose the different options for the taxes paid, which is going to be coming out really soon, and it's going to be a great tool for everybody and make it a little bit easier. And, Ivy's getting better every day. Their development team keeps working on things, and I just think that Ivy is the way of the future, and it's very exciting to see all of their technologies coming out. So we just kind of went over this report. So basically the sales tax liability report in QuickBooks. Let's go to this side. Saved. This is the sales tax liability report in QuickBooks, and it's going to have accurate information if you follow the steps. So just make sure that you follow the steps every time, and your sales tax reports are going to be accurate, your profit and loss reports are going to be accurate, everything's going to translate beautifully. Just get set up from the start, get to a good place, and keep in touch with your bookkeeper. That's the last topic that I want to bring up. So we've developed a plan where you have weekly calls with your bookkeeper, and we feel that that works really well. So you have a dedicated bookkeeper, and any questions that any of our Ivy clients have every week about those little obscure transactions that don't fit inside the quote-unquote steps that we've just discussed, we can always discuss how to address that in these weekly calls. Or we can train your staff in order to help them be better about understanding liabilities and posting payments on purchase orders, and whatever the designer needs is what your bookkeeper should be helping out with. So you should really have a great relationship with your bookkeeper, and you should really keep in touch with them and make sure you guys are working side by side, because like I said, interior design is a complicated accounting process, and you want to make sure that you are working with somebody that is going to give you the help that you need and the correct help that you need, and not just the way that they know how to do it, which sometimes happens. And then you can work with your bookkeeper to just be like, hey, I need this report because I'm feeling like this area of my business is lacking. And then your bookkeeper can send you those reports, or you can send automatic weekly, sales tax liability reports in order to get an accurate sales tax balance at any given point in time. So, again, you're talking about all that money in your bank. What's actually yours? Those are important things to know. And when your business grows, those numbers become a little bit less clear unless you're working closely with your bookkeeper to understand those reports and get those numbers. So I thank you for attending the webinar. It has been my pleasure to share this information with you and all the things that I have learned in my time in accounting and interior design. Please know we are always here to help you with any questions you have, the setup process, or train you on the steps. Just reach out to us. You can visit us on our websites or give us a call. Have a great afternoon, and thanks again for listening.